In this video, we're going to be looking at the two methods that are applied when the seller offers the buyer a cash discount. The two methods are the gross method and the net method. We're going to be looking at each method under two scenarios. In the first scenario, the customer pays within the discount period, and in the other, the buyer makes the payment outside of the discount period. We're going to begin with our recognition of the sale, and we're going to be ignoring cost of goods sold in this set of entries. Normally when we have a sale of merchandise, we recognize the sale and the change in the inventory and recognize cost of goods sold. We're going to skip over the cost of goods sold to keep this a little shorter. So we're going to look at the recognition of revenue. So we have to increase our sales revenue. So we'll choose sales revenue from our drop-down list of accounts. We're not going to be receiving cash as our asset. Instead, we're going to be receiving accounts receivable. These two accounts will be used for all of our sales recognition. So we can go ahead right now and fill them in. So on April 6th, regardless of whether we use the gross method or net method, we'll be recognizing an increase in the asset accounts receivable and an increase in our sales revenue. Our sales revenue, the amount that we'll recognize, will be not based on the list price. Again, differentiate between a trade discount and a cash payment discount. Under GAAP, we cannot recognize revenue based solely on the list price. Revenue is going to be based upon the agreement. That's what the revenue recognition rule tells us. So here the customer has agreed to pay 80% of the list price, which normally sells for $800. I'm going to make the formula a little more complex than it needs to be. So I'm going to begin first by figuring out the unit price, starting with determining the discount. One represents 100% of the list price. However, we're going to allow our customer to pay 20% less. So they'll be paying 1 minus 0.2, or 80%. We'll then multiply that by our list price of 800, and then multiply that by the number of units that we sold. And again, this is a little long way of coming up with our measurement of the sale, which is 128,000. We will debit or increase the accounts receivable by an equal amount. And again, that's going to be the same entry in our second scenario under the gross method. So let's just fill that out now. In our first scenario, the customer is going to pay within the discounted period. So let's look at the accounts that are going to be affected on the payment of the cash collection with the applicable cash discount. So we're going to be receiving cash. That cash will bring down the accounts receivable balance to zero. Since we increased it by 128,000 in our first entry to get that balance down to zero to show our accounts are fully paid, we're going to need to debit the accounts receivable by 128,000. However, the customer is not going to pay the full amount. They're going to take advantage of the discount. Their invoice is going to be for that $128,000, but they're going to pay 1 minus 0.01 which is our cash payment terms, 1% if paid within 10 days, and that's what our customer has done. So they'll be sending us a check for $126,720. The difference, that debit amount, is going to represent a sales discount, and the amount is going to be for the invoice amount less the cash payment. This sales discount will be used to offset revenue. The gross amount of revenue from this transaction is $128,000. The net amount will be $126,720, the revenue minus the discount. If the customer pays outside of the discount period, they're going to have to send us a check for the full amount of the receivable. So they'll send us a check for $128,000, and again, we will reduce our accounts receivable by an equal amount. Move over to the second video now, which we will discuss the net method.